Thank you, Doug, and good morning to everyone. As Doug said, I'm here to talk to you about where we're at. What's the state of our labor market? What are some of the challenges? And then lead into my colleagues on the panel who will talk to you about the policy implications of this. I think if we look at Canada's labor market performance in an international context, we can feel somewhat good about where we are. We know that we had a more shallow decline in terms of job losses and a quicker recovery of those losses than our other major industrialized countries. Canada had fully recovered its job losses by the end of 2010. The UK was next, but that was in 2012, and only this year did the US fully recover those lost jobs. The Eurozone, as you can see, continues to struggle. They're battling to get themselves back on a sustainable growth path and create jobs. They're down about 5 million jobs from their peak level. While here in Canada, we have net new job creation of 750,000. So not that far away from both the UK and the US, where they are larger economies and have created just over 1 million net new jobs. So if we look at it using other variables to see how Canada stacks up, I think we see a few things on this chart where we look at the unemployment rate gap, meaning that if you have a negative gap, your current rate is below your 10-year average. And you can see only the euro area is standing with a positive gap, their unemployment rate about 2 percentage points above their 10-year average. We look at the participation rate. Well, everywhere participation rates are falling, but again, Canada stands with a higher participation rate. Same story for the employment rate, which is employment relative to the size of the population. Again, having come down, but still in better stead than our other major countries we're looking at here. Long-term unemployment, though, has been sticky, and the youth unemployment rate, even though it's sort of at its average, still unacceptably high. Now, one of the concerns we've seen recently with Canada's labor market is people are concerned that we've stopped generating jobs. And certainly we really did barrel out of that recession. On average, we created 270,000 jobs per year between 2010 and 2012. 2013, we stumbled and we created only 100,000 jobs. Well, thanks to that whopping gain in September, we're on track to we have created, 160,000 jobs so far this year. And we think we're going to continue to see the momentum build in 2015 because we do think Canada's economy now is entering a phase of strengthening growth driven by an increase in demand for our exports. The Bank of Canada's Business Outlook Survey, which was released on Friday, showed that 54% of companies surveyed intend to increase employment over the next 12 months, with only 10% saying they intend to reduce the number of employees that they have. On an industry basis, it's service sector jobs that have been created by and large. On the goods front, it's the construction industry, the hot housing market certainly generating employment gains. Manufacturing continues to see a deterioration, and this is just relative to its recent peak. We know it's been on a steady decline over the past decade. Now, having said that, when you look at the chart for manufacturing, you do see some steadying out in terms of manufacturing payrolls. So bumpy month to month, but I would say looking like a little more stable now than it has for quite some time. So when we look at other areas of concern in Canada's labor market, people are concerned that, okay, we're creating jobs, but they're all part-time jobs. Well, when we look back, 2010 to 2012, certainly all jobs created were full-time jobs. That was the area that was doing the heavy lifting. 2013, where we had a bit of a slip, it switched, and jobs created were part-time jobs. But as we look at this current year, we've seen it flip back again. And we have seen about 100,000 full-time jobs created and 50,000 part-time jobs created. So a bit of a turn there. So I think it alleviates some of the concern that people have that we're slipping away in terms of creating full-time jobs. And this is full-time jobs relative to the total employment. Certainly, we did see a sharp drop from the 80s to the 90s, and I think probably more structural issues were at play there than what we've seen lately. You can see it's pretty flat overall if we draw a line through that. But what is concerning is that there's still a lot of people who are working part-time who would prefer to be working full-time, just can't get a full-time job. As a percent of part-time labor, that's about a quarter of them, 27%. As a percent of total employment, that's about 5%. So this is concerning because obviously this is a resource that isn't being fully utilized. And when we look at the youth numbers, they're higher. There are more youth who are saying they would prefer to work full-time but can only get part-time employment. Now, the unemployment rate overall has fallen to about 7%, very close to its 10-year average. In September, it even moved a bit lower to 6.8%. But again, data has been volatile. We do think that the trend will continue lower towards 6.5% based on the strengthening in employment growth as we go forward. However, it's been stuck, really, I would say, between 6.9 and 7.2% for about 18 months. We need to see some movement there. Now, one of the bigger concerns, I think, is this chart. This is our long-term unemployment rate. As Ben Bernanke said, we don't want people to be off work for significant periods of time because their skills will atrophy. They will find it more difficult to get hired, they'll become discouraged, and they'll drop out of the labor market. So this, again, a resource which we can't afford to lose. The duration of unemployment, again, average level, but well above what it was prior to the economic downturn. So youth unemployment, that's the top line. The unemployment rate trending lower, basically in line with its long-term average. But I thought I'd look at it in the context of not just the youth unemployment rate, but what is happening to the unemployment rate for the 25 years and older space. And in that case, you can see that, relatively speaking, the youth unemployment rate remains elevated. It hasn't performed as well. So an area that needs to see further gains in terms of making that relationship move back down on a relative basis. Wage growth continues to be relatively muted. And of course, this reflects the fact that Canada is still running with some surplus capacity. We look at the output gap here just to add some sense of why would I say that there's excess spare capacity in the economy. The output gap representing where GDP is compared to where it would be if we were running at our full potential. And that gap still exists. And I think the fact that the unemployment rate is having a hard time breaking through that range around 7% also denotes that there is spare capacity in the economy. And until we see that, we're not going to see a significant pickup in wage growth. Now, the participation rate, people look at and say, oh, look at that trend. People are discouraged. They're leaving the labor force. And that's really what's driving some of the unemployment rate statistics. So we looked at it in a little more detail. And we thought, okay, what could be a sort of a structural reason why you might see the participation rate fall on a consistent basis? So we said, okay, if the population stayed exactly the same in terms of its composition as it was in October 2008, what would the participation rate look like? And that's that gold line. See, it really wouldn't move very much. So when you do apply the current movement in terms of people getting older, moving into cohorts where participation rates are generally lower, that's what you see. You see the participation rate overall coming down. I don't want you to remember this as the only thing I said, but certainly we're all getting older. And so we are moving into these cohorts. We are seeing people retire. Just to give you a context, people in that age group, 25 to 54, they made up 55% of the population in 2004. In 2014, they're down to 51%. Conversely, the 55 plus, they've moved from making up 28% of the population to 34%. So we're definitely moving into these lower participation rate cohorts. Another factor I would point to is the fact that after 30 years where we saw the female participation rate continuing to climb, it's steadied out. At the same time, for men, it had been a gradual decline, and again, it's steady out. So we're not seeing any upward pressure in terms of increasing participation. So we need to see somebody coming into the labor market. We need to see this move forward. So, of course, one area we can look at in terms of tapping into potential labor participation is the Aboriginal community. So here we're just looking at the participation rate by age cohort of Aboriginal population and the non-Aboriginal population. And you can see that the bars represent the participation rates, significantly lower participation by the Aboriginal population. Now, some of it has to do with location, obviously, but we looked at it in the context of, we could see 10 years forward, those participation rates even out. It would add about 0.5% to GDP. So this is a source of labor that we can tap into to meet some of the challenges of the demographic factors. Another source, of course, of new labor is immigration. We've got our unemployment rates here for immigrants as well as for Canadian-born, and you can see that gap persists. We did a study in 2011 and said, okay, what if immigrants who we note had, higher levels of education and skills, generally speaking, than the overall Canadian-born population, what if they're rewarded the same as they would be if they were Canadian-born, meaning their skills are being rewarded at the commensurative level? And what if we saw the unemployment rates gravitate towards each other? What it showed us was that we'd add about $30 billion to GDP, or 2.1%. So again, an untapped resource in terms of an area where we can see an improvement. We need to see changes, which I'm sure my colleagues will be discussing, whether it's accreditation recognition or the new programs that are trying to bring in skilled labor that matches labor demand in the economy. So that is the update on the state of the labor market currently. I'll pass it back to Doug, and we can listen to what policies should be put in place to accomplish these goals.